Look at this engine pushing past its red line. That's what happens when you force MetaTrader 4 to do something it wasn't built for. MT4 is the global standard for Forex trading, but its core architecture is rigid. The software was coded for a strict one-to-one relationship, one user logging into one broker, managing a single account. But active traders outgrow that setup quickly. You reach a point where you need to separate high-risk strategies from core capital, run multiple automated expert advisors, or manage funds for several different clients. This diagram breaks down the 3 types of traders who eventually hit this wall. You have the retail optimizer diversifying broker risk, the algo trader running automated bots, and the money manager handling client portfolios. But as you see here, all 3 of these operational paths funnel into the exact same restriction, the single-window desktop terminal. The first instinct is to just brute force the problem manually. You download the installer 5 times, place them in separate folders on your C drive, and open 5 separate windows on your monitor. Instantly, your computer's RAM usage spikes, the processor struggles to keep up, and the screen turns into a cluttered overlap of flashing price quotes. The hidden cost of that setup is the mental fatigue. Keeping track of which window belongs to which account forces your brain to constantly context switch. When market volatility spikes, that clutter leads directly to execution errors. You might click sell on the wrong terminal or miss a sudden price breakout because you were hunting for the correct tab. Finding a real solution requires a compromise. You have to decide what matters most to your specific strategy, keeping your overhead costs down or guaranteeing absolute execution speed. These are the environments where professional trading happens. Let's start by evaluating hardware approaches to fixing the MT4 bottleneck. We'll evaluate your options using this matrix, comparing setup, cost, ideal user, and limitations. First, the local workaround duplicates MT4 folders on your hard drive. It costs $0, but the severe CPU drain limits your computer to 5 accounts. This fits budget-conscious retail optimizers. Now, the second option, running terminals on a Windows virtual private server. Moving software to a data center guarantees low latency and continuous uptime. The catch is the recurring subscription cost. If you're an algo trader relying heavily on expert advisors, this is mandatory. Home internet outages cannot be allowed to take bots offline. Hardware setups force a strict choice. You either sacrifice your personal computer's processing power for free, or you pay a monthly premium to buy remote stability. If hardware adjustments don't fit your workflow, you can move away from desktop client installations entirely and manage accounts through the software layer. Returning to our matrix, the third row is the Portfolio Web Manager, using cloud browsers like send.win for isolated profiles. This prevents session conflicts, but restricts you to the web version of MT4. Our final entry is the Scale Orchestrator, using official multi-terminal tools. Multi-terminal allows executing trades simultaneously across dozens of connected accounts with one click. The problem is it's hard locked to a single broker. To bypass that restriction, money managers turn to third-party trade copiers that cross broker lines using a master-slave architecture. You execute a trade on a central master account, and the software broadcasts that signal to a dozen slave accounts across different brokerages. But notice the red markers. Routing data introduces execution latency and requires granting outside API access. Software solutions perfectly solve the problem of bulk execution, but they ask you to compromise on either platform features or raw execution speed. This decision tree maps your goal to your tech stack. Algo traders running expert advisors need VPS hosting for guaranteed stability. Money managers executing across brokers need trade copiers. Lastly, managing web-based MT4 accounts requires cloud browser isolation like send.win to eliminate login friction. Scaling requires more than just picking tools. Every new account, VPS login, or API key you add effectively doubles your exposure to a breach. 10 separate accounts create 10 distinct entry points into your capital pool. A single leaked password on a low-priority demo account can provide a complete roadmap for an attacker to find your live master logins. You have to adopt strict security friction to mitigate this. Use unique passwords for every terminal, enable mandatory 2-factor authentication, and utilize investor-only read access whenever you share performance data. Successful multi-account management comes down to choosing the configuration that handles your specific volume with the least amount of operational risk.